It is my pleasure to introduce Dave Gedeon. Dave is the Vice President and Head of Research and Development for Nasdaq Global Information Services. And let's welcome back John Jacobs again, Executive Director at the Center of Financial Markets and Policy at Georgetown.
All right, we're here for our fireside chat. There's no fire, but
I think those are illegal indoors.
yes, I think they should be illegal indoors. So anyway, so thanks everybody. It's a pleasure to be back for this fireside chat today. Full disclosure: Dave and I worked together many years at Nasdaq when I was also in Global Information Services there, so we know each other well. Dave, a lot has happened since this conference last year, and for example. And we'll, I'll just give you kind of litany of the background. We have now Bitcoin futures. We had this whole cryptocurrency craze that occurred. I think it really put cryptos on the map for many, many Americans that weren't there before. We have seen the SEC kind of reverse its position on crypto ETFs, and whereas they were actually had been some filed, they're pretty much shut the door right now at the current time. But there's blockchain stuff coming, et cetera. So let's start there. So tell us your view on what you think the SEC's position is on cryptocurrencies, and will we be able to buy a cryptocurrency ETF in 2018?
Yeah, so the SEC has been definitely very active, which I think is a good thing to see in this type of environment with a lot of the volatility, a lot of the sort of the unknowns, and really just a lot of questions about the different types of ETFs that have been filed by the various providers. And Nasdaq as a listing exchange and a trading venue has been very active in these conversations. And I think a few weeks ago the SEC put out sort of a series of questions that they really wanted to get feedback from the various issuers on a lot of the core questions. One of those being what's price discovery? How can price discovery occur? It's very easy for Apple or Microsoft or Samsung and really global equities that have robust exchanges, robust monitoring, the inability really to influence the price on these securities, and that's what you see as the vast majority of things that are constructing of ETFs or indexes and ETFs. And that's a big question within the Bitcoin, within crypto trading today is what is the price source? What type of exchange surveillance agreements exist between a Nasdaq or New York or BATS or other exchanges and the local Bitcoin operators? And so it really until those types of questions get addressed, I think it's going to be really challenging to see the SEC approving any of the products. And one of the things that we have heard is the SEC is taking a very different viewpoint than say the CFTC from the futures side that are both listed on CBOE and CME out in Chicago. And they're really taking the viewpoint on trying to protect the retail investor, saying that if we're going to agree that a Bitcoin or Ethereum or Litecoin or really any crypto ETF can get listed, then we want to have full assurance that the market is robust, transparent, objectively priced to quote unquote protect the retail investor. While the CFTC is taking more of an institutional approach. The future as an asset class is a far more institutional side. The size to actually trade in the futures is significant, in terms of the margin requirements and other sides. So I think that's where you see the difference between the approval process of why CME and CBOE and other exchanges have either put out futures or are trying to put out. And we'll see how the SEC continues. But I do not believe that we will see one in 2018 get approved and launched. I will note, though, Nasdaq as an exchange company, we do have our Nordic exchanges. So over in Sweden, the OMX Stockholm exchange, there is actually 2 ETNs listed that have been trading very well. One tracks Bitcoin, one tracks Ethereum. And with the good run-up that you saw in crypto values, they had a lot of interest, they had a lot of trading activity. And for the most part, our view is that they performed very favorably, but they're in a different structure. They were in an exchange-traded note structure rather than the fund structure.
And the note structure is that it's on the balance sheet of a firm, and they're using the change in price of the cryptocurrency as like an interest rate. Yes. As opposed to the underlying is not actually the cryptocurrency.
Yes, they're not actually, they don't actually have to hold the underlying crypto to provide that value like you would see with an ETF like gold, where they actually physically hold gold, and then the price change is what dictates the net asset value.
Right. Another way I look at it, and please comment, is the SEC dealing with crypto ETFs. The issue is that the underlying at the end of the day is delivery. It's a physical asset of the actual cryptocurrency, whereas a CME product or a CBOE product, those derivative products, are cash settled. They're values. So the SEC does have the added issue of handling of whenever they approve a crypto ETF, they're going to be approving a wallet or a vault for that cryptocurrency. And I think that that's something that does give them pause to think about. But I don't know if you have any thoughts on that as well.
Yeah, and that's one of the things I think when you think about the robustness of the ecosystem around crypto. Every time there's a headline about a hack or about a theft or a compromised wallet, that is that works its way across the regulatory channels to see, oh geez, what are we going to do if we approve this and then there's a big hack on a particular fund's storage? How is that going to make us look? How is the retail investor going to be protected and made whole in that type of environment? So I think that is another aspect on it, really the security behind everything.
So let's switch gears from the other side. So we've been talking so far about, how do you, how different ways to invest in blockchain issues, whether it's a cryptocurrency ETF or a future. On the other side, though, you work for a big exchange company and you are in a information services unit. You provide indexes and data for a lot of different users out there to provide financial products. How do you see other applications of blockchain technology in the business side?
Yeah, and blockchain, it's a very interesting moment, especially for Nasdaq has been extremely active, both as an investor, as a technologist when it comes into blockchain, and really trying to focus on the core technology of how that can help and really make more efficient a lot of the processes that we have as an exchange. And so we've undertaken several different efforts, whether that's utilizing blockchain to help with proxy voting. It's a very arduous process when you have to do proxy, either proxy contests or just, normal proxy votes, trying to get new directors on. And especially in illiquid securities or privately held securities. So we've taken on some initiatives utilizing blockchain and to help through that, obviously taking advantage of an extremely efficient technology. But I think the core of really where we are at is moving past sort of the concept of it or the idea into actual business implementation. And so I think that's a big step forward when we see that within blockchain of understanding now that major financial companies are actually deploying the technology and utilizing it as a revenue driver. And that's a big shift from probably where we were a year ago or 2 years ago, when it was more of sort of a nascent idea of, hey, this is pretty cool. The technology behind crypto is actually more interesting than crypto. And then crypto spiked up and probably changed some people's view. But all the while, there's been a steady churn of, a lot of the innovative technology and fintech companies, which, Nasdaq kind of fits right in there between a financial institution and a technology provider to be able to deploy blockchain out into an actual commercial environment.
Yeah, I use a word there that I want to focus on for a second, innovative, because I believe, and I love your comments on this, that in financial services, especially in the exchange space and the brokers and dealers and all that stuff, the banks, that they're looking at blockchain and that's kind of triggering a new wave of innovation. They're creating innovation labs, innovation enterprises within their organization, and blockchain is kind of the catalyst for that. So I don't know if you've seen that as well, where we're starting to see that the other advantage of a new technology like blockchain that has got everyone talking about it in the whole world of buzz is it's forcing these big enterprises to focus energy and time on innovation.
Oh, definitely. I think that's one of the big changes in the market today, and this is across all industries. I think you're really seeing it, where the adapt or die aspect of a business cycle is being fully realized and fully embraced by companies across all different economic sectors. So whether that is financial services or just pure technology. And I think that's a big difference from what we saw, 20, 30, 40 years ago from a lot of companies where they were just sort of very protectionist. They put up walls, they had their quote unquote moat, and they just wanted to try and exist and kind of see the future out and not really worry about it. But what we've seen is the disruption of that entire business model. So whether that's Amazon with retail or the ETF, just from a trading perspective, passive to active management. I mean, that's been a massive disruption. And so what all companies I think are really starting to embrace is the adopt rather than die mentality. And blockchain is a great example of that, where you have a lot of companies, Fortune 500 level companies, who are being extremely active. Nasdaq is just one example of that. Whether it's IBM, Goldman, even Overstock, from trying to reinvent itself as a sort of discount online retailer to try and find new technologies to be able to compete. And that's really exciting because for us, personally as a consumer, as a user, we're getting better and better product. Companies are becoming more and more engaged, and we're actually able to take advantage of all of this investment that's going on. And then as an investor within these companies, you're seeing better returns. You're seeing better adoption. So the large companies aren't just sitting on, really resting on their laurels, if you will. They're actively investing. They're actively pursuing new opportunity. So whether that's acquisition, whether that's just organic R&D spend, and that's why, when we think about like the Nasdaq launched an index in partnership with Reality Shares tracking the blockchain economy. And one of the things that when you look down at the components, you see a lot of big names. You see IBM, you see actually Nasdaq, you see Goldman Sachs, a couple of names that I've already referenced, because these are the people who are actually driving the change. They're driving the innovation. And that's a little bit different than I think in years past, where it was the smaller companies driving and forcing change. You now have larger organizations thirsty for investment, driving that side and wanting to really be on the forefront of change rather than being forced to change down the road.
So you must have been reading my notes when I wasn't looking, because I was going to ask about that. Index is called the Nasdaq Blockchain Economy Leaders Index, right?
Yes.
You launched it after I left, I noticed. But anyway, so my question though is to that point though, when you have an index and you put large financial and technology institutions in, doesn't it give a bias to those big companies, even if they're not all dedicated to blockchain? So I just explain that issue, because a lot of the people would say you still need an index of the smaller pure play companies to get a better measure of the actual impact on the economy. So how do you balance those two things?
Yes, yeah, and that's one of the tricks from an index design perspective, which John mentored me on that for many years. So he's sort of throws me a softball here, which is great. But you have to be able to use sophisticated weighting process, and along with Reality Shares, there was creation of a scoring mechanism that couples a company's size, their revenue, their import within the economy, the blockchain actual economy, how much R&D they're spending to create the weighting side. So subsequently, no company has too large of a weight, so you're not just buying an index of Goldman or the mega cap names that are involved. And so that way, if a smaller company comes on and participates, a name like Hive, within the economy, they can maintain a weight, and you can actually get exposure to those names. Now, the other part though on that is to actually invest and get exposure to these names. You do actually have to own the large names. And we've seen that as a big shift within just thematic stories in general. So whether that's a cybersecurity, cloud computing, it is really the big names who are driving that and the big names who are generating the revenue. So if you want exposure, you have to be able to balance that out of the startups, the small caps, along with the well-established mega caps who are starting to pivot their business model.
That's really important. And for those who don't have this deep love of indexing that Dave and I both do, people don't realize the Dow Jones Industrial Average 30 stocks. The reason it's still popular is because it's been around since 1896, and it's got a great record for academic studies and things like that. But it's 30 stocks, and it's price weighted. And many times the Dow will move tremendously, driven by one single stock. So people then take that one stock movement, relate it to, the Dow's up 300 points or down 500 points, and now think that some people will draw the connection, look how the economy's doing. The Dow is not the economy, and the single stock can be the Dow. So you have to understand an index construction is critical to understanding what that index is measuring. And so I appreciate the insights into the scoring mechanism. I think that's important. We used to call it the Walmart effect. You put Walmart in the index, and it drives, Walmart is a proxy for the index. And so what's the point of having the index? So I think it's very important. So we're almost out of time. Any last closing comments you want to share? What's your prediction for the rest of 2018?
Yeah, I think one of the big things that we're going to see throughout 2018 and really over the next couple years is the continued embrace of blockchain as a technology and as a delivery mechanism. And so whether that's through proxy voting, just through data dissemination. I would anticipate a lot of continued investment, within the broad, especially financial services, as they see this as a huge opportunity to kind of reshape a lot of the traditional mechanisms that we have. I mean, my business still relies extremely heavily on FTP, which is one of probably the oldest of internet technologies that we have. And, there's better things out there. I think we all know that, but, being able to invest and actually deploy here, with blockchain, when we distribute data to people all over the world and want to be able to do it simultaneously on a secured mechanism and be able to track through, that is probably where you'll see a lot of change. And just in terms of that data distribution from a financial company to its customers or to its end users, I really do anticipate a lot of continued growth in that regard.
FTP, what do you still got a flip phone? I mean, Dave, come on, it's 2018. So anyway, ladies and gentlemen, let's thank Dave for his insights. I really do appreciate it.